Good evening, everyone. My name is Giselle Baticolan, and my topic is about product cost analysis in SAP or ERP, activity-based costing in ERP, problem consolidating data from subsidiaries, currency translation, intercompany transaction, management reporting with ERP system, and data flows in ERP system. So the first one is product cost analysis in SAP or ERP. So product costing is a tool used in SAP for planning costs and establishing material prices. It helps in estimating the cost of goods sold manufactured and COGS, which is cost of goods sold of each for each product unit. So, ibig sabihin, ito yung pagpaplano or estimating if kung magkano magagastos nila sa isang product. So, a large company daw may produce thousands of complicated products, and the task of gathering the information required to develop product costs can be a major challenge. They said that when we use the integrated information system such as SAP or ERP in product cost analysis, we can have a lot of advantage because it is very timely and it gives accurate information available in the information system. So the key pieces of information for our cost analysis are the direct material cost and the direct labor cost. So sa direct material cost, it is the cost of raw materials and component used to create a product. So direct material costs are determined from the bill of material, which is managed in the production planning module. So when we say direct labor cost naman, these are the wages that are incurred in order to produce goods or provide service to customer. So direct labor costs are determined from the product routing, which document the machine and work centers used in production of product, along with equipment setup times, production rate, and labor requirement. So the BOM and routing information combined with other data maintained in the production planning module allows the SAP ERP system to determine the quantities of direct materials and direct labor used in a product. This production data combined with material cost information stored in financial accounting module provide the basis for product cost analysis. In the SAP ERP system, a product cost is based on a product cost variant. In SAP ERP, the term variant is used to mean a version of a plan or analysis. So when we say a product cost variant, it is basically the procedure for developing a product cost analysis. Many variants can be created for different planning requirements. Once the product cost variant is developed, it only takes seconds for the SAP ERP system to gather the required information to create the product cost estimate. So in this figure shows the result of product cost analysis in the SAP ERP system. This screen not only provides the cost analysis, but it also allows the user to explore the details about how cost analysis was calculated. So this SAP ERP product cost tool greatly reduced the time required to develop cost estimates, and it increased their accuracy because it gets its data directly from system modules where the data are real time. So the next one is activity-based costing in ERP. Activity-based is a costing method that identifies activities in an organization and assign the cost of each activity to all products and services according to the actual consumption by each. So ABC is not another inventory costing method, but rather it's provide a different method of calculating this cost. So kung kanina sa product cost analysis, there are just planning or estimating on how much the cost of materials and labor they will use per product. Dito naman sa activity-based costing, this is the time na nag-a-assign na sila ng price based on manufacturing, kaya mas tumataas yung cost ng product. So sabi, the accountants identify activities associated with overhead cost generation, and they keep records on the costs and on the activities. So when we say overhead costs, it refers to the ongoing cost to operate a business. For example, yung mga other fees na binabayaran nila like sa advertising, sa rent, sa repair taxes. So next, the activity-based costing is often used when competition is stiff. Overhead costs are high and products are diverse. A company using activity-based costing can determine which product have the highest profit margin, information that is crucial for making strategic decision on product lines. So in ERP system, Feeder would track the various storage activities and the cost of each. When determining the profitability of each kind of bar, Feeder cost accountants calculated storage costs based on the number of storage activities required by each type of bar. So this costing is more precise than computing an average storage cost based on a total storage cost and machine hours, and then allocating the amount to each kind of bar conceivably if the activities differ enough from one bar to the next. One could be significantly more or less profitable than the other. This fact would be revealed by the activity based costing approach, but not by traditional cost accounting approaches. An information system that supports activity based costing allows the managers to see that difference. So, activity based costing requires more bookkeeping than traditional costing method because a company must do activity based costing in addition to traditional costing. And because activity based costing requires a company to keep track of instances of activities, not just the cost. So next is problems consolidating data from subsidiaries. So data consolidation is the corralling, combining, and storing of varied data in single place. It lets user manipulate the different types of data from one point of access and help turn raw data into insight that derives better, faster decision making. So some companies have special operation that make closing their book at the end of an accounting period a challenge. So, meaning ng closing their book is the time na-approve and na-finalize na nila yung data sa financial report. Like the income statement and balance sheet can be created. Companies that have subsidiaries or branches face such a challenge, and most large companies have more than one legal entity. So when we say legal entity, this is an individual or company or organization that has legal rights and obligation. So because the company executive team must understand the big picture in terms of overall operation and profitability, account balance for each entity must be compiled and forwarded to the home office, so consolidated financial statement and report for the company as a whole can be generated. You might think this would be merely an arithmetic problem. Add up cash for all entities, account receivable for all the entities, and so on through the accounts. The job, however, is more difficult than that. So, problem can arise due to variety of issue including the following. So, the first one is account stated in another country, currency must be converted to US dollar in the case of a US parent company. So, ito yung account na stated sa ibang bansa na dapat i-convert into dollar. So next is the transaction between a company and its subsidiaries must be eliminated from the account. Ito yung mga transaction between sa company at sa mga branches niya na kailangan alisin. Next is currency translation. The following scenario illustrates the problem of currency translation, which is the process of converting account balances expressed in one currency into balance expressed in another currency. Assume 1 euro is worth 1.25 US dollar and a company European subsidiary report cash of 1 million euros at the end of the year. When the European subsidiaries balances are consolidated with those of the US parent company at the end of the year, $1,250,000 will be recorded. The same sort of translation would be done for all the European subsidiaries account. A complicating factor is the exchange rate fluctuate daily. However, an ERP system can be configured to access the daily exchange rates and translate daily transaction automatically. Next is intercompany transaction. So transaction that occur between a parent company and one of its subsidiaries or between different subsidiaries, known as intercompany transaction, must be eliminated from the book of the parent company because the transaction does not represent any transfer of funds into or out of the company. As an example, suppose that Acme Inc. owns by Banet Manufacturing. Banet sells raw materials to Acme for $1 million. Acme uses the materials to make its product. Banet sale to Acme cost of sales. So, from the point of view of an outsider, money has merely passed from one part of the consolidated company to another. So, a company cannot make a profit by selling to itself. Companies often do business with their subsidiaries, and for such companies, intercompany transactions occur frequently. Keeping track of those transactions and making the adjustments can be a challenge for accountants. So, example of intercompany reconciliation. Imagine there is a parent company that has extended its business and now has two subsidiaries. An example of this is Facebook is the parent company and Instagram and WhatsApp are the subsidiaries. So next is management reporting with ERP system. The integrated nature of ERP system and the use of common database and built-in management reporting provide numerous benefits. Although the reporting of account information is a common accounting function, it is often very challenging for companies to generate the right report for the right situation. Without ERP system, the job of tracking all the data required for financial report is monumental undertaking. And kapag ang may ERP system naman, a vast amount of information is available for reporting purposes. However, often it is years after an ERP implementation before a company figures out which reports are the most critical for decision making. Data flow refers to the movement of data between systems. In this case, the movement of the data between customer relationship management, software and enterprise resource planning, software tools have very different purposes. So as you have seen in earlier chapter with ERP system, all transactions in all functional areas of a company are posted in centralized database. It is worth re-emphasizing that the database is the company's book. There is no separate set of books for marketing and sales or production or purchasing. Thus, even though it is a common usage to refer to data flows in an ERP system, it is actually a misnomer. The data not flow from one ERP module to another because they are all in one place, which is the database. Each area views the same record. It might be better to speak of data access than of data flows when talking about how these areas use common database.